thank you for subscribing to the Small Dose here. Um, we're, we're gonna get started with stock market indexes, and my objective here is to explain to you, give you basics on this, just very basic coverage, and point two is give you some potential resources so that you could expand your knowledge on these particular items. Um, a few examples. First of all, whenever you see on the TV, maybe on the websites, newspapers, media coverage, uh, these types of names, Nasdaq, Bovespa, IBEX 35, S&P 500, FTSE 100, Nikkei 225, these are benchmark indexes. They essentially are a standard against which portfolio managers can measure their portfolio performance. Um, in every exchange, you will find these indexes, and these indexes are representative of how the exchange is performing on a particular basis. So, um, managers are going to look at beating the benchmarks or perhaps just meeting the benchmarks should the year be a positive year for the macroeconomic conditions, for the capital markets, as well as for the particular stock markets. Um, with that said, these are six representative geography diversified um, indexes. This one's located in the US, this one's located in Brazil, this one's located in Spain, this one's located in the US, and this one's located in the UK, and this one's located in Japan. So, with that said, managers are looking to compare their portfolio returns against these indexes, and you can find all the information, more frequent information on the local media sources, such as websites, newspaper official sites. So, let's get started here. If I go to the Wall Street Journal, for example, you're gonna see the major stock indexes here, which are representative. These are some of them. As mentioned earlier, the Nikkei 225 is here. The S&P 500 is here as well, and so is the Nasdaq. We're going to use the Nasdaq just to play around with it. We can see the value, the last value, which was on the 1st of June, given that Friday was the close, was 7,554.3. Okay, what does this mean? This means that there was a change from the previous date, which would have been month end for May, and the change was positive with a 1.51% gain, or you know, etc. Now, Wall Street Journal is a great place where you can go and find your information on these things. It's got it's got nice colors, it's got great charts, and you can be up to date and learn from there. Another place is Yahoo Finance. Yahoo Finance again, you have the S&P 500, Dow 30, Nasdaq 7554.33. Same, the percentage change is plus 1.51. You got it right here. So this is another great place, which kind of helps you look and find the performance of your indicators. Bloomberg, of course, is very interesting. Here we can see more defined information. Depending on the level of complexity, you will be able to either advance and evolve, or digress and continue. It will all depend. So essentially, for example, Bloomberg, we have the Americas, we have the Dow Jones, S&P 500, Nasdaq Composite once again. Remember, 1.51 was a percentage change since. We have the NYSE. Here we have some in Europe, Middle East, and Africa. Some nice charts. The Euro Stoxx 50, the FTSE 100, the DAX in Germany, the CAC in France, and the IBEX 35 in Spain. So here you can see the first layer of entry into any particular market will be to understand the benchmark indicators. Here we have a more audio-visual view. This is a nice place where I've been able to basically build, see some more audio-visual stuff. Here we have once again the Nasdaq, 1.51%, 7554.332 as per closure. So here you can also essentially just find some good information to assist you in the growth of your financial knowledge. I'm gonna now go a little bit more deeper and say, for example, I'm gonna take one of these benchmark indexes such as the IBEX 35, the IBEX 35, and as you can see, these indexes have a constituent or a bouquet or basket of stocks. IBEX 35 has 35 stocks. The 35 stocks are listed right here. These are can respectively change. The list can be amended, the list can be modified, there can be inclusions, deletions, and it can each of them have different stipulations as to why they're included in the indexes. It could be due to market capitalization, trading volume, amongst other factors. So here what we see is 35 companies, so on and so forth. Just to give you from a bottom up view, we have Telefónica, we have Repsol, we have Iberdrola, we have BBVA, we have Banco Santander, Banco Sabadell. We have some very interesting diversified companies here, multiple industries, and so on and so forth. Well, with that said, there's also a chart here which tells us the key thing that I wanted to take away from here is how indexes are used. They can help the plan set the objectives for asset allocation, so it's a very good benchmark, reference point, standard point. And point two is they are often used to establish the universe of securities from which the manager will likely invest. So it's a very good starting point to build a small portfolio, large portfolio, medium-sized portfolio, any portfolio. Furthermore, thanks to the indexes, in the subsequent lessons, you'll be able to understand how they are able to use so that we can model performances and measure accordingly with our portfolios. So it's a good way to measure the performance of our portfolio on a analyzed basis, on a monthly basis, on a periodic, frequent basis. Okay, that's all for the first lesson. I hope this is moving towards a good direction. I'm gonna try to keep them short, crisp, concise, sweet, and very objective oriented. Have an excellent close, and look forward to the next lesson. Thank you.